should you bet against Jim Cramer? Inside the high-risk, high-reward world of SJIM ETF. What does SJIM stand for in the context of SJIM ETF? Answer: A. Short Jim ETF. Explanation: SJIM stands for Short Jim ETF, designed to take positions opposite of the investments recommended by Jim Cramer. Which index does the SJIM ETF primarily track? Answer: D. None of the above. Explanation: the SJIM ETF does not track a traditional index like the S&P 500. Instead, it takes positions contrary to the stock recommendations made by Jim Cramer. What is the main investment strategy of SJIM ETF? Answer: C. Short the stocks recommended by Jim Cramer. Explanation: SJIM ETF strategy is to take short positions on stocks recommended by Jim Cramer, betting that these stocks will underperform. Which of the following is a potential risk associated with investing in SJIM ETF? Answer: D. All of the above. Explanation: like all ETFs, SJIM ETF is subject to market risk, potential tracking error, and could also have a higher expense ratio depending on its management costs. What type of investor might be interested in SJIM ETF? Answer: C. Aggressive investors. Explanation: SJIM ETF is likely to appeal to aggressive investors who are willing to take on higher risk for the potential of higher returns by shorting stocks. How often does the SJIM ETF adjust its holdings? Answer: D. Based on Jim Cramer's stock recommendations. Explanation: the holdings of SJIM ETF are adjusted according to the stock recommendations made by Jim Cramer. Which of the following best describes the management style of SJIM ETF? Answer: A. Active management. Explanation: SJIM ETF is actively managed as it changes its holdings based on Jim Cramer's recommendations rather than tracking a fixed index. What is the primary goal of SJIM ETF? Answer: C. Outperform the market by shorting Jim Cramer's recommendations. Explanation: the goal of SJIM ETF is to outperform the market by shorting stocks recommended by Jim Cramer, betting that they will underperform. Which of the following is a potential benefit of investing in SJIM ETF? Answer: B. Diversification from traditional long-only portfolios. Explanation: SJIM ETF provides diversification as it employs a strategy that is not correlated with traditional long-only equity portfolios. Who might be considered the target audience for SJIM ETF? Answer: D. Investors looking for a hedge against their long positions. Explanation: SJIM ETF can serve as a hedge for investors who are looking to protect their portfolios against potential declines in stocks recommended by Jim Cramer. What is the expense ratio of the SJIM ETF? Answer: B. 0.50%. Explanation: the expense ratio for SJIM ETF is 0.5%, which covers the cost of managing the fund and implementing its strategy. How does SJIM ETF gain exposure to the stocks it shorts? Answer: A. Directly shorting the stocks. Explanation: SJIM ETF gains exposure by directly shorting the stocks that Jim Cramer recommends. Which of the following factors could impact the performance of SJIM ETF? Answer: D. All of the above. Explanation: the performance of SJIM ETF is influenced by the accuracy of Jim Cramer's recommendations, overall market trends, and the efficiency of the fund's management. What type of fund structure does SJIM ETF have? Answer: C. Exchange-traded fund, ETF. Explanation: SJIM ETF is structured as an exchange-traded fund, ETF, allowing it to be traded on stock exchanges like a regular stock. What is a common criticism of SJIM ETF strategy? Answer: C. Dependence on a single individual's recommendations. Explanation: a common criticism is that the fund's strategy depends heavily on the stock recommendations of Jim Cramer, making it vulnerable to his potential misjudgments. How might SJIM ETF react to a market-wide downturn? Answer: A. Perform better as it shorts stocks. Explanation: in a market downturn, SJIM ETF might perform better because it shorts stocks, which can gain value when the prices of those stocks decline. What kind of diversification does SJIM ETF offer? Answer: C. Strategy diversification. Explanation: SJIM ETF offers strategy diversification by providing an investment approach that is opposite to traditional long-only equity strategies. Can SJIM ETF be part of a long-term investment strategy? Answer: B. Yes, as a tactical allocation. Explanation: SJIM ETF can be part of a long-term strategy as a tactical allocation to provide hedging or to capitalize on short-term opportunities. Which market condition might benefit SJIM ETF the most? Answer: B. Bear market. Explanation: SJIM ETF would benefit the most in a bear market, as its strategy involves shorting stocks, which typically perform well when stock prices decline. How might SJIM ETF's performance be evaluated? Answer: D. All of the above. Explanation: SJIM ETF's performance can be evaluated by comparing it to traditional index funds, other short ETFs, and by analyzing the performance of the stocks it shorts. What is the ticker symbol for SJIM ETF? Answer: A. SJIM. Explanation: the ticker symbol for the short JIM ETF is SJIM. What is a potential advantage of investing in SJIM ETF over shorting stocks individually? Answer: D. All of the above. Explanation: investing in SJIM ETF offers lower transaction costs, professional management, and diversification, compared to shorting stocks individually. What regulatory body oversees the SJIM ETF? Answer: A. SEC, Securities and Exchange Commission. Explanation: the SJIM ETF is overseen by the SEC, which regulates securities markets and investment funds in the United States. What is one reason an investor might avoid SJIM ETF? Answer: D. All of the above. Explanation: an investor might avoid SJIM ETF if they believe in Jim Cramer's recommendations, prefer high dividend investments, or have a low risk tolerance. How does SJIM ETF's performance correlate with Jim Cramer's recommendations? Answer: B. Negatively correlated. Explanation: SJIM ETF's performance is negatively correlated with Jim Cramer's recommendations, as it shorts the stocks he recommends buying. In which scenario might SJIM ETF underperform? Answer: A. When Jim Cramer's recommendations outperform the market. Explanation: SJIM ETF might underperform when Jim Cramer's recommendations outperform the market because the fund shorts the stocks he recommends buying. What is the role of the fund manager in SJIM ETF? Answer: B. To make discretionary investment decisions based on Cramer's recommendations. Explanation: the fund manager makes discretionary investment decisions based on the stocks recommended by Jim Cramer, implementing the fund's short strategy. What kind of investors should consider avoiding SJIM ETF? Answer: A. Risk-averse investors. Explanation: risk-averse investors should consider avoiding SJIM ETF due to its higher risk profile associated with shorting stocks. How can SJIM ETF provide a hedge in an investor's portfolio? Answer: A. By shorting stocks that might decline. Explanation: SJIM ETF can provide a hedge by shorting stocks that are expected to decline, potentially offsetting losses in other parts of the portfolio. What might be an appropriate allocation to SJIM ETF in a diversified portfolio? Answer: B. 0 to 5%. Explanation: an appropriate allocation to SJIM ETF in a diversified portfolio is generally small, around 0 to 5%, due to its higher risk and specific strategy focus.